presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Commentez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great, Adam. Yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So,
well, we appreciate you growling and prowling with us.
Yeah, sir. I've done gold reports and all the softwares and all your books and read it. Generational thank you.
Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
Good afternoon, everybody. Tommy O'Brien coming to you live from TFNN. And as I come to you, markets hitting session highs as we talk. S&P's now up more than 0.8% in the green. It's Tuesday. It's Thanksgiving week. We got a full trading day tomorrow. Markets extremely thin as you can expect. As I mentioned this morning, tomorrow, at least when I was in college working for Budweiser, biggest drinking day of the year. And it does make sense when you just think about the fact that everybody's home. Nobody has to work the next day. You're seeing friends, family, younger generations. They always had, from my high school, they had a young alumni get together the night before because they knew that everybody would be away at college or after college. But especially when you're right out of high school, right? You're coming back to that area. Everyone's around. Be careful out there, folks. This holiday season, no drunk driving. Too easy to have a few cocktails. And life's too beautiful, right? Order that Uber. Be aware of it. The only real battle there is just being aware of it. Everyone's having fun, right? There's a lot of alcohol flowing, not as much as there used to be. But nonetheless, markets, thin volume, but we are going higher, man. S&P's up by, as I speak, almost 9/10 now. 56 points, 67.77. How's that? NASDAQ 100 right now. Little volatility to the downside on the opening bell, and then yeah, we lift up from there. NASDAQ's up 100 points. And, folks, you're talking about 400 points from the lows of this morning. Now, as I mentioned before, okay, don't mistake the fact that you're getting light volume. Now, today's going to have more volume than yesterday. It is. That's quite a reversal bar. As in, you drive down, we got a green bar after trading all the way down to 24,602, and you're going to have more volume than yesterday. Okay, yesterday, you didn't even do 600,000 contracts. We're almost hitting that number already today. But just because you got light volume doesn't mean you're going to get light volatility. They almost go the opposite way, right? If you only have a few participants in any market, you can get huge swings. But if you have many market participants, it's smoothed out by a demand and a supply flow, for lack of a better term. All right, the Dow. Now, how about it? Check out the Dow. We're coming back into that channel, and we're doing it with force. Today in the Dow, already more volume than we did yesterday. 47,170, you're up by 1.4%. And the Russell, particularly rate sensitive, and you are charging higher in the Russell, and you're going to take out yesterday's number with volume as well. Up 2.2% on the Russell. You take a look at yields. Up by 8 ticks. We're coming into that area yet again, right? Where we were in September, where you were in October. We're here again in November. Higher price, lower yield, the 10-year at the magic number 4%. 4% on that 10-year right now. As the odds of a December cut come in focus. And we got dollar weakness, and that is a big move. Okay? This area of about 100, just above 100. An area of resistance. You've bounced off this area, whether it was in July. Almost made it there in October, but not quite. Made it to a high of about 99.50. Made it all the way up to 100.25 early this month, and we've rejected that area once again. 99.69 right now on the dollar. And gold up by $40. There's your weekly. I mean, look at gold, right? These 2 weeks, where's all the volume? It's at the highs, man. Volume's at the highs. Gold is strong. Okay, you get volume all the way up to almost 4,400. You've backed off a bit last week. You trade lower, lighter volume. Now, you're going to get no volume this week, okay? I was talking about this on show this morning. You take a look at how some of these equities just ran up with quality volume to the upside. And then on the pullback, the volume's lightened up. And look at this volume last week, okay? First Majestic's one of them. And there's many in the gold report, folks. If you're interested, Check it out right on the newsletter tab at TFNN. Look at the volume in First Majestic. 66 million. When's the last time we did 66 million? You did it once in August. Before that, you got to go to the beginning of the year. Extremely light on that last pullback right there, right? You break below the candle on November 3rd, which is their earnings, First Majestic, and then we're getting a bounce. Now, you're not going to get the confirmation this week, though, with volume, because it's just not happening right now in these equities. We're 2 days in. We've done 22 million. Now, even if you average out the volume, in terms of you're going to have 3.5 days of volume. If you say, what's the average daily volume this week? You take a look at the daily. Okay, look at these 2 days. Yesterday, one of the lightest days that we've had. That was a big price action in many of these equities, okay? But not on volume. One of the lightest volume days. Everyone's getting ready for the holidays. Markets drifting higher. Reversal from the lows of this morning. You jump over to Google. So, from a larger landscape scenario, okay? And, this one hitting Wickoff advising Russia on how to pitch Ukraine plan to Trump. Not sure that's how advisors usually hit. That one just hit in the tape. Okay, can't help. It was up there. NVIDIA, Google AI chip rivalry escalates on report of Meta talk. So these chips will be put in data centers in 2027, okay? And Google built these chips out and they use them themselves, right? Meta's in talks to spend billions on Google's AI chips, adding to the months-long share rally as Google pushes higher. And yeah, that would signal growing momentum for Google's chips and the potential to challenge NVIDIA's dominance. So they'd put them in data centers in 2027 and may rent chips from Google's cloud division next year. So they may rent them next year, and Meta may put them in their data centers in 2027. Not bad, right? And Google's pushing $4 trillion. NVIDIA's at about $4.2 trillion right now. And Alphabet has been a big winner. You better believe it. An agreement would help establish TPUs, which is the Google chips, okay? Tensor processing units in data centers in 2027. An agreement would help establish those as an alternative to NVIDIA chips. Imagine how many orders do you got to get for your chips to be able to start competing? And boy, they got some catching up to do, but I've never seen numbers that make it worthwhile. And yeah, they already do these for Anthropic. It says it up here somewhere that they already have a deal going on with Anthropic for these chips. Yeah, they earlier agreed to supply 1 million chips to Anthropic. 1 million, just 1 million. That's how they start. 1 million chips to Anthropic. A lot of people were already thinking about it, and a lot more people are probably thinking about it now. I agree with that sentiment. Say, hey, Google's selling chips to Meta. Why aren't we having Google compete with NVIDIA? And, the amount of money that they're spending, a little competition, not good for NVIDIA. Down by 3.5%. But market, yeah, we're higher. We're coming back with our man Basil Chapman. We'll be right back, folks.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. Welcome back, folks. We got the S&Ps up by 54 points right now. NASDAQ up by 84. And right now, folks, we're going to jump over to our man Basil Chapman, as we do each and every Tuesday. Let me pull it up. My screen's a little bit slow. There we go. Each and every Tuesday at 3:15. And, folks, you can check out Basil's outstanding program, the Tiger Technicians Hour, after the morning program I do every day at 10 a.m. And, of course, don't forget to check out the opening call. If you haven't tried it yet, folks, check it out. You get a number of amazing webinars. You can sign up for a month. It's $149. Comes with a 30-day money-back guarantee. You gain access to all those webinars that Basil's done for his subscribers for that month, and it's risk-free. Can't go wrong. Basil Chapman, good afternoon.
Good afternoon, Tommy. How are you?
I'm doing fantastic, man. You know, Basil, it's almost Thanksgiving. I'm excited for some good eating. And boy, we got a little heat down here in Florida. It's 84 degrees, so we're enjoying it. And but we got some heat, man. Things are good. How about yourself?
We got cool.
I say it, right? As in, you know, it's amazing. We go through all that heat, and I'm not crying, folks. We got it made in Florida, believe me. But we're looking forward to a little cool weather, which is coming. 84 degrees as we're coming into December is getting a little much. But, hey, you take it in stride. With the good, with the bad, it all comes. So what do you think about this market, Basil?
Well, talking about hot, look at the Dow, up 665 at 47,113. So I spoke to you last week, and I said that I was looking at the volatility index, and that the volatility index that screamed off of that regional bank scare back on the 17th of October to 28.99, and that I was looking at this very closely because I said there's a chance that we could spike one more time towards the 28s. If we break above that, that's one thing, but if we stall below it, then I've got to be looking at the general market as finding some kind of a low, and I'm going to go into that in a second. But look what happened. My rule of thumb is whatever you're following, if it goes through a peak, D or an E below a previous major high and pulls back, you've got to be careful. Well, this is 28.27 was the high, the most recent high 4 sessions ago. 28.99 was the one on the 17th. So now look where the VIX is. 28.27 is trading at 18.72 right now. That's number one. Number two is I went through this and I spoke to you about it, and I've mentioned it on my show, and I've mentioned it in my videos that I give my subscribers every Friday afternoon. And I said, I believe we've made an internal low. I don't know whether we're going to retest it because this is called the Chapman Wave Dark News Cloud Cover using the Dow Daily Chart. And whenever there's interest rates or some kind of fear in the market, I put a little rectangle and I follow closely. And very often we get what I call an earthquake and then the aftershock. And you know that aftershocks can be less than the earthquake in degree. They could be the same or they could even be higher. Well, I treat this and on the upside, I call them internal highs and residual highs. On the downside, I call them internal lows and residual lows. Most of the time, we make a little cup formation or either a cup formation or an arch formation, and we do a test. Once in a while, you get an internal low. I'm just going to scroll back. I don't want to take too much time, but we got an internal low way back in August of last year. And that started a huge move to the upside. So I've got to be careful thinking that there might be a retest because the V-shaped pattern to me is really important. It didn't look like we could do it yesterday, but look at the Dow. And we went long yesterday morning. Actually, we've been long since April, but we added to it a little aggressively yesterday in the morning. And I'm looking at this INDU, and look what happened. This particular, I'm missing a candle. I've never seen this before. Yesterday's candle is missing, but it was a red candle. We're slightly high and then pull back. Look at the power of this candle, and yet the MACD still has to turn up. Stochastic still very negative at 13%, but this relative strength index is starting to move. That's the little gray line right there. And I felt when I went through my charts after my subscriber video on Friday, I said, no, I've just got to go through these. I've got everything I'm looking at is suggesting that there's over the weekend, any little bit of news I heard, they were talking about the fear. I heard the word crash 3 or 4 times, market crash. I heard every interview, of course, they wanted to get the most negative news they could. So they were talking about inflation, and people and people can't afford this and can't afford that. And then they interview people at airports, and it's packed, and the airline industry says this could be the best year they've ever had. So I said to myself, no, something's wrong with this picture. We were short, and we got out of a short. Now we're back to this long position. And the candle that we're looking at here was really important. If it was just a little minor candle, I'd say, okay. But the power of this candle, if it can hold into the close, I think is suggesting that the old school, and I'm going to just talk about this very briefly, is starting to look at this. General Motors, if everything's so bad, why is General Motors at an all-time high is relative because it used to be a Dow stock, and then it was out of the Dow. It's out of the Dow now because it's actually a brand new stock. But look at this. Trading, we are long this. It's 73 up to, just made a new all-time high. Something's wrong with this picture if it's so negative. So I decided that we would start putting in long positions. We did also add to our position. You know, we've got Robinhood from the 16s, and then we kind of didn't do anything for a little while. But we added back yesterday a trading position at 109. It's trading at 116 right now. I'm thinking that this is very select. If you're in the wrong area, if you're in, say, NVIDIA. I've been doing about this for some time. NVIDIA's, I think they're done for now. They'll come back, but right now, I spoke about this on my show. I don't want to take too much time. Maybe I'll talk about it again tomorrow in my show at 10 o'clock, the Tiger Technicians Hour. But Hung was on the CEO of NVIDIA, he was everywhere, and he was promulgating it, and I thought, oh, man, I think he's losing his focus. And when that happens, you just see the stock come down. You know, we've seen this. We saw that in Tesla when Musk took his eye off the ball. So I'm just looking at this and I'm saying it's very select, but I like what I see, and we're going to be doing more adding. So if anyone's interested in my opening call newsletter, we were raising cash and we putting cash back again. And now here's another very important instrument that I want you to look at. I think I'm forgetting something. Oh, just the gold contract. We're still holding some of our gold, but look, here's the gold contract. It's got this wedge-shaped pattern. If gold starts to trade at 4,250, you must have jumped out of your chair there, huh? 4,250. I think you can go towards the 4260s, and that'll be a nice breakout to the top side. But it has to hold this Chapman wave inside track support level. So it really, over the next week, it mustn't go under 4,060. I think then it stalls and it can go sideways.
Hey, Basil, can I ask you about the dollar? Because I love and I agree with everything you're saying, man. Would you look at the dollar? What do you think? Because, I'm looking, the dollar's rejecting that 100 right now, and, of course, that's helping gold. What do you think about the dollar? There we go. Yeah.
So the dollar's just made a peak E. It's a kind of a double top. I mentioned that, I think in one of my shows this morning or yesterday, that there's a chance that it just double tops in the 200-period moving average. Let me just show you something very interesting. Here's the 200. It hasn't been near the 200-period moving average for a long time. I don't want to go back. It'll take too much time. But here's a little double top. So I'm looking at the dollar, and I'm saying if the dollar pulls back, it would start to help even more some of the Dow stocks. So I'm kind of very encouraged by what we're looking at right now. And
I love it.
Putting money to work.
I love the breakdown, Basil, as always. And pretty cool, the Dow, it's almost like equal weighted. It's not equal weighted, but it's the one area where NVIDIA doesn't have that outsized impact. So a great play, man, great position. Folks, check it out. The opening call on the front page. And, of course, our man Basil Chapman at 10 a.m. every day. Basil, thanks so much, man. We'll talk to you tomorrow.
Happy Thanksgiving.
Happy Thanksgiving, man. We'll be right back, folks.
Oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Welcome back, folks. We got markets in the green right now, just drifting higher. S&P's up by 55. That's 0.8%. NASDAQ up by 0.4. And yeah, how about the Dow? Great trades by our man Basil Chapman. The Dow up by 1.4%. And the Russell, particularly rate sensitive, up by 2.3%. All right, folks, right now, as we do each and every Tuesday and Thursday, and we're not going to do it this week Thursday because we're going to be eating some turkey, but we're going to jump over to our man Tim Ord. You can reach Tim at his website, ord-oracle.com. You see it right there. And don't forget, he's got 2 great webinars, folks, right under the Services tab at TFNN, The Secret Science of Market Tops, How to Identify Market Tops, and the 6 Secret Ratios Every Trader Should Know. Tim Ord, good afternoon.
Good afternoon. So let's dig into it here. It's been kind of volatile over the last month. So kind of trying to figure out where we're going to go here. This is the October high right there. And that high, if you can see, was higher volume than the previous months before it. And so normally when you hit a higher high and a higher volume, at some point that high is going to be tested. And the test will be the proof of the pudding. Either you got higher volume on that test, that would be bullish, suggesting the rally is going to keep going. If you do it on a lighter volume, then you may flip sideways at least and possibly even turn into a top. The high October came in at 689.7 on the SPY, which is 1.78 billion shares. So we're taking a shot right now trying to get to that high. Will we make it? At some point we will. That was the monthly chart. We're going to flip down to the weekly chart. This is the weekly SPYs. Back in October, you touched above the upper Bollinger Band. I do a lot of stuff with the Bollinger Bands. They seem to work really well. If the market gets really stretched, it'll hit the upper Bollinger Band. If it gets really stretched to the downside, it'll try to hit the lower Bollinger Band. In October, we hit above that Bollinger Band, and we got the consolidation. And we've been going down for, going into last week. That was, 3 weeks down. So now we're trying to rally back. And we kind of had a selling climax here. If you look at this volume and you compare that volume to the previous, going way back, that's basically the highest weekly volume we had going back to July. So definitely a selling climax. The bottom of that selling climax is support, the top of that selling climax is resistance. And we're about ready to hit that resistance, which is, a little bit above, 676, probably in that range. So we're going to hit that, if not today, tomorrow, if not tomorrow, maybe Friday. And if you hit it on a lighter volume, normally you have, it's a resistance. Is it a top? Maybe not. But this is actually bullish seasonality all the way into January now. You can have some weeks down, but usually you don't get big tops in November or December. If they're going to come, they're going to come in January, February, or March. So we'll see how that happens. But we may have a little resistance at last week's high. So let's get down to flip to the daily chart. Okay, this is last week's high, and it comes in around 676. We're approaching it. We had a selling climax. We actually talked about this last Thursday, about this low here, selling climax, testing the previous climax low in early October. We actually hit that on a little bit higher volume, but the next day we hit it on a lighter volume, and that ended up being the bottom. So if you test the selling climax on lighter volume, that's support. So to get below the previous low, you have to have high increased volume. But I don't want to get too complicated here. But last week's low tested the previous selling climax low on higher volume. If you can kind of read that, you compare this volume here.
Sure. Yes. No, it's clear. I got you totally right. Yeah.
Yeah. So what may happen here, we may come up at some point, go back and test that low again on the weekly time frame. So it's a bunch of garbage going on, but at some point we're going to test this high up here. The only reason why I say that is because the monthly chart suggests we're going to test that high. So kind of a difficult market, which is nothing unusual, as these trading ranges can be kind of furious. But at minimum, we're going to get back to last week's high, and that we're approaching that right now. So
can I ask you, because you say that, and I think about it too, and it's just a vicious market in both ways sometimes, right? And does that ever point one way or the other to you? And because I look at it, and you look at a company, and I'm just going big picture anecdotal, but NVIDIA, right, obviously in the press, they're ending it today, but just the swings alone for a company like NVIDIA, it's so large. I think they're at 4.2 trillion now. They were at 5.2 trillion not that long ago. $500 billion on that equity, and just the market in general, the moves. I mean, even the SPY, you're looking at 40. I think we got what do we got? 30 points, 40 points like that in 2.5 months. Does that give you, do you think of it just seems extreme, the market, and I love it because I think we're coming into some volatility myself too, as, of course we are, right? We're swinging. But do you look at that at all? It's a lot of volatility like you're talking about.
Yeah, it is. I mean, it's actually, if you go look back in history, it's kind of normal through the October to the December time frame. If you look all the gyrations going on, that all happens the last 3 months of the year. And usually they turn out, market's up, I think it was 78%, not that high, 73% of the time, or around 70% of the time, markets are up every year. If you go back in history to whenever I expect like 1930, if you go back and do history, so every year has a 70% chance the market's going to be up, and so and especially December or October through December, the markets usually end up bullish, even though you got a lot of volatility. They're bullish. Just getting back to the video. Actually, I don't have that chart in front of me. You flip to the monthly chart. If you're hitting higher highs and higher volume, I wouldn't worry. I buy the pullbacks. But if you see a big energy day coming off of a high, especially on the weekly time frames, volume usually starts to decrease or increase to the downside on pullbacks, and we kind of have that right here on the SPY. So it's something kind of worrying me here. Will it turn into a big bull market? Not for sure yet. It's too soon to say, but it does have some signs for it. So
I appreciate you breaking it down, because even myself, I look at that bar. I mean, you talk about a bar sticking out with selling, right? I mean, that is a bar sticking out with some selling for sure. Something to keep our eye on. Folks, we're coming back with Tim Ward. We got one more segment with him. Don't go away. We got markets in the green. S&P's up 1% now. We're drifting higher. Dow up by 700. We're coming back with Tim, folks. Stay tuned. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien. Welcome back, folks. Markets in the green, and yeah, we're just drifting higher, almost near session highs right now. You got the S&Ps, up 62 points, 0.9%. NASDAQ 100 up by 0.5%, and the Dow up nearly 700. We're talking to our man Tim Ord. Don't forget, folks, you can reach Tim at his website every trading day. Ord-oracle.com. There it is. Check out our man Tim, and he's got some great webinars at TFNN.com under the Services tab. All right, Tim, where are we going from here?
All right, let's take a look at GDX. This is the this is the daily. I talked about Bollinger Bands. I put kind of Bollinger Bands and everything. They're just, even though it's kind of a low-tech indicator, it does really good job to figure out where the lows are. This kind of this is a daily, and I put a Bollinger Band on it. When it gets way above the upper Bollinger Band, especially when the open close are above it, you can expect consolidation. And this was a minor consolidation back in this time frame, but it did pick out the high right there to the day. It opened and closed above the upper Bollinger Band. That marked a high for a couple, 3-4 weeks, pulled back, and if you notice right here, you got the open close on that particular day right there. It's kind of a doji. He did open and close below the lower Bollinger Band. That pretty much marked the bottom. You got to test a week or so later, and now the market's trying to rally up here. We got a gap up here. That gap's going to get filled at some point. We did get above I drew this trend line right here because there was kind of a resistance zone. We popped above it. Now we're trying to rally. I don't know how long that rally is going to take, but at some point we're probably going to rally back up to the 84 area. But it goes up real quick. If you notice where the Bollinger Bands are right here, you see that right there?
Yes.
If you go up real quick, you'll get 100% above the upper Bollinger Band. That means it's a high. So you don't want this market to rally too fast. If it does, that 80, I've been saying 85 to 70 range is going to be a trading range. So if we kind of explode on the gold issues here pretty quick and you get 100% above the upper Bollinger Band where the open closes above the upper Bollinger Band, you're going to consolidate. So, but if it kind of creeps up, the Bollinger Band just kind of goes up, that will say the market can go on higher. But so it depends on this rally. If you blast back up into that 85, 84 area and you close above the 100 Bollinger Band, you're probably going to pull back. So I'm thinking there's a trading range that's going to go on. This is a better view of it. This is the...
Can I ask you, because the Bollinger, right, for those listening that don't know it, I mean, that's basically like you have a moving average in the middle of it, and then you got the standard deviations. Is that what it is? Is that two standard deviations, the upper and the lower from that? Is that how that works, Tim? Do you know?
Well, yeah, I do. The middle Bollinger Band is a 20-day moving average, and the upper Bollinger Band's two standard deviations above the upper and 2 standard deviations below the mid-Bollinger Band. So what it is if the market gets stretched too far in one direction, either up or down, it's going to hit the Bollinger Band. And so I do them on the daily, weekly, and monthly. And if you just get market, you want the market, when it rallies, you want it virtually go up slowly, or not real slow, but if the faster it goes and it starts getting way above the upper Bollinger Band, it's going to pull back. Just to get back to medium, which is basically a 20-day moving average, which is mid-Bollinger Band. So, matter of fact, let's take a look at, glad you brought that up. If you notice, open and close above, this is a monthly chart. And if you look at that, I don't know, you can't quite see it, but that market back in 2016, open close above the upper Bollinger Band, that was a high. There, if you notice a little red thing there, that's the open close. It's a doji, but it did open and close above the upper Bollinger Band. That was 2020. If you look at the current time frame, this is what, November, so this is current, so this is October. If you look at that open and close in October, it open and close above the upper Bollinger Band. So it works on all time frames. It's a low tech indicator, but it seems to work pretty well. So
I love it, man, and I appreciate you breaking it down. I do, because everything reverts to the averages and statistics at some point. And when you're 2 standard deviations, I mean, the number it's a bell. Statistics, one of my favorite courses in college. It was, I remember, those bell curves, right? Statistics. Yeah. In terms of, and if you're at 2 standard deviations, it's supposed to be about 95% of those data points are going to be within 2 standard deviations. So if you go outside of that, folks, that's it. And guess what? That is straight up math, which it doesn't have to be complicated, like you say. I love it.
Yeah, it's easy. But here's what I'm saying. If you notice, we're halfway above the mid-Bollinger Band on the monthly time frame right now. It's kind of hard to see probably from the folks, but
okay.
If the thing keeps rocketing up here when we get back to 85, you'll have about 80% above the upper Bollinger Band. So I don't know if we'll do it this month, but I still think that the market's just due for consolidation. If you look at this rally, I mean, we've been going on up, for basically 2 years with very little consolidation. So I'm thinking we're due for some sort of a sideways pattern here. It's by the bigger trends. I've been showing the XAU to gold ratio and some bigger time frames going on. I think that this is due for consolidation. This is probably one wave there. This is 2 wave down. Then we went through a big 3. I think this is probably 4 here. Then we go up to 5 later on. Maybe starts in 2026 sometime. But I'm not bearish here. They're going to have a rotation in the market. The big ones are due for a rest because they've been basically rallying for 2 years. And, are they going to rally for another 2 years? Probably not. So they're due for consolidation. I think the GDX is pointing that out. So, I got some emails. We never got to this last Thursday, but this is the monthly Roscan Gold Corp. It's a pink sheeter. Symbols RCGCF. I guess your readers like the low price ones because I got a couple of emails from them saying.
I know, and I tell them you got to be careful with 8 penny stocks, folks. That's all I'll say. If you're trading penny stocks, you better believe there's a chance they go to 0. But I mean, I can see why people like them when you go from 5 pennies in September to 12 pennies, right? Right. I'm sure. So go for it.
It's kind of all or none. They're not going to sit
That's a good attitude. As long as you know you're risking the all or the none, right? Hey, right, we're traders. There's a risk and a reward on the table for sure.
Yeah. So they asked me to it. Well, the whole thing, this is a monthly chart. Momentum matters in the market. You got to have volume and price going up. If you don't even mess with it. But this particular case, you got a sign of strength through a mid-Bollinger Band, and you got decent volume coming off of that. That's the highest volume you had, except for that was a buying climax back in 2023. If you see something like that coming around, I'd sell it. But this is momentum starting to turn up. So what I'm thinking, the big stock's going to take a a rest, and that money is going to go somewhere, and they're probably going to stay in the gold market. So they're going to start picking these small ones up, and this was possibly one of them. No guarantees. Your downside zero, and your upside don't know.
Risk reward, like any trade, man. I appreciate the breakdown, Tim. This is the dollar's bumping up against, this is me, but the dollar right now pulling back, and we'll see how that goes, because I think that could be a little wind behind gold's back as well. Tim, have a great Thanksgiving, man. We appreciate it. We'll talk to you next Tuesday.
All right, sounds great. Thank you.
Thanks so much. Folks, check them out, ord-oracle.com, and those webinars at TFNN. We're coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks, and there's nothing getting in front of this market right now, and we have volume picking up coming into the close. Higher prices in the S&Ps up by 1%, NASDAQ 100 up by 0.7%, 170 points in the Dow. And yeah, as I was mentioning in Basil, check out that opening call, folks. Great calls. Basil stepping into the Dow. Great execution. Always nice when you get a trade-off with a hot start. And yeah, NVIDIA in the Dow, you talk about the ultimate equal weighting, right? It's not an equal weighting at all. As in, NVIDIA is only trading at $177. You know what equities have more impact than NVIDIA? Many in the Dow. Home Depot, $352 equity, up 4.7% today. McDonald's, $310, up 2%. Walmart, up 2.8% today. UNH, a $326 equity. Goldman's, $800. Right? Goldman 6 times the impact. No, 3 times the impact. Remarkable. So you gain exposure while you have little exposure to NVIDIA versus everything. And boy, those equities are rocking, man. Let's jump over the home builders. Okay. As they say, right? Dan, it's happening. It's all happening. Now, the volume's not going to come in. All right, but you got a nice sign of strength here. And I was waiting for a pullback, and I think this might be the one, folks. Check out Lennar, up 6.6% today. And boy, can you imagine what would happen in that market? Yeah, look at the home builders. Rates are going lower. We're getting a December cut. Okay, they're telecasting it. To Powell's allies, they're out there. They're talking about a cut. We're getting it. Okay, Powell played bad cop at the last meeting, and now it's going to be, well, the consensus is we got to cut, right? Powell's saying, they got to keep it. You can't let the economy overheat too much. He said, we're not either way. We're getting a bounce now, man. That pullback on lighter volume, you catch a bid, and you're extending it. Home builders higher. 10-year sitting at about 4%. Markets higher. Folks, thanks so much for tuning in. Have a great night. Have a safe night. We got one more day. We got a full day of action tomorrow. Markets open for a full day before we do some turkey on Thursday. Folks, have a great night. Thanks so much. We'll see you tomorrow morning, 9 o'clock for the morning market kickoff. See you then, folks.
Building